Oh, thanks, Greg. Thanks for having me on. And, by the way, when the Fed came out and initially described inflation as being transitory, this was something that I expected because for years I was saying that that would be the exact response that we would get from the Fed. In fact, for years, as I was talking about the inflation problem that the Federal Reserve had unleashed, because as you know, quantitative easing is inflation. It's just a euphemism for inflation. So the Fed had been creating inflation for years and years and years, and just hiding behind the cover of a rigged CPI to claim that there was no inflation, or ignoring what was happening to asset prices as if those price rises had nothing to do with the inflation the Federal Reserve was creating. But what I said from the beginning was that initially, when inflation finally reared its head in a way that the Fed could no longer dismiss, that the initial reaction would be, oh, it's a good thing because, we dodged the bullet of deflation, we wanted more inflation. And then as it got higher, they would say, well, we have higher inflation, but it's transient, it's transitory, it's not going to stick around, so don't worry about it, it's going to go away. That's exactly what I was saying they would do for years. Then the next thing I said they would do, they've also done, is they would start pointing fingers at other factors and blaming, something else, looking for scapegoats, which they did. COVID, Putin, supply shortages, right? The Fed will never accept responsibility for the inflation that it creates. It's always going to look for scapegoats to blame it on. And so everything I predicted with respect to the inflation breaking out and the way the Fed would react to it has come true. And, the next thing, is the Fed is now pretending that they're going to fight inflation. But I say they're pretending because they have no real intention of doing it because they can't. Because if the Fed could fight inflation, they would have started the fight a long time ago. They would have acted preemptively when it was obvious that it was a problem. And now that they've admitted it's a problem, interest rates would still not be below 1%. The balance sheet would still not be $9 trillion. They would have already begun fighting it if they could. They can't, which is why they haven't. They talk about fighting it, but they don't actually do it.
Well, we're also seeing the dollar strengthen, which is kind of, in some ways, kind of weird. In other ways, kind of predictable because everybody was printing massive amounts of currency. I had Jim Rickards on years ago, and he wrote his Currency Wars. And he says nobody in their wildest dreams thought everybody would print tons of currency at the same time. I guess the least dirty shirt in the laundry basket is the dollar. What do you make of the dollar being 104 or 103, 104?
Yeah, we're up near the COVID highs for the dollar. So there is a lot of resistance in this area for the dollar to move higher. And there are a lot of dollar bulls around. There weren't that many, not too long ago. And so we've kind of flipped the sentiment. So we're probably nearing a peak in the dollar rally. I don't know, that we're at the peak for sure, but I think we're close enough to it that I wouldn't be that concerned. But I think there are two factors that are driving the dollar strength. And of course, it's not dollar strength in an absolute sense. Dollars are losing purchasing power, but then again, so are euros, so are pounds, so are yen. It's just relative to other fiat currencies. The dollar is less weak. It's not strong. But I think there are two reasons for that. One is the war with Russia and the Ukraine, which clearly has a more profound impact in Europe than it does in the United States. So that creates a reason for Europeans to be extra worried about inflation and easy money and looking for safe havens. And so there, on a relative basis, it may look like the dollar is less dirty than the euro. And so I think by default, some of those flows are going into the dollar. But the other factor is, of all the central banks, the only one pretending that it's going to fight inflation is the Fed. Because the ECB, the Bank of Japan, they don't care. Look at those nuts in Japan. They've already said we're going to print as many yen as we need to prevent the yield on a 10-year Japanese government bond from rising above 25 basis points. So the yen has imploded, and the Eurozone has done nothing. They're still in the transitory mode over there. So at least the Fed is pretending it's going to fight inflation. And as a result of that pretense, you're getting people in the dollar because they look for rising rates. But again, I keep saying pretending because they can't do it. Because first of all, even if the Fed delivers all the rate hikes it's promising, which is maybe to bring interest rates up to 2.5%, 3%, that is meaningless in a world where inflation is 8 or 9%, and that's an imaginary world, because in the real world, inflation is 15 to 20%, as you said. So if you have 15% inflation, how do you fight it with 2 or 3% interest rates? You don't. 2 or 3% rates in a 15% inflation environment is a stimulative monetary policy. You see, the Fed keeps talking about neutral. What is a neutral rate? And they say neutral is where you're neither stimulative or contractionary. And they defined neutral years ago when inflation was below 2% at 2 to 3%. Well, clearly, in a 15% inflation world, or even in the 8% fantasy world, neutral can't be 2 to 3%. Neutral's got to be 8 or 9% or 10%. Well, there is no chance of getting to neutral, let alone tight, because in order to fight inflation, you need tight money, not loose money. So tight money would be a positive real interest rate. Well, we're not even close to 0% interest rates in real terms, let alone positive. Paul Volker in 1980 allowed rates to go to 20% when inflation, as measured by a far more accurate CPI, was no higher than 13.5%. You had 6.5% real interest rates to fight inflation. How could you fight inflation today with negative 5, 6, 8, 10%, whatever it is, interest rates? You can't. The Fed would have to get much more aggressive, but the problem is they can't. And that's what I've been warning about for over a decade. As the Fed was on this course of deliberately creating inflation, I always said that it was going to come back to bite the Fed because they were going to let loose a monster that they were not going to be able to fight, like Frankenstein or something. The Fed used to say, oh, we don't care if we have too much inflation because that's a good problem to have because we know how to solve it. We have the tools. And I pointed out that they may have the tools, but they ain't going to use them because it was like, having a handgun as the tool for a headache. You may have the tool, but you're not going to pull the trigger. The Fed, because of years and years of cheap money and creating all this inflation, the economy is levered up like it's never been. You've got 30 plus trillion national debt. You've got record amounts of corporate debt, credit card debt, auto debt, student debt, mortgage debt. Everybody is levered to the hilt thanks to 0% interest rates for 12 years. They've been at zero. I mean, we've only been above zero for maybe 2 or 3 years, but if you average the rate, maybe less than 1%. So the Fed has been giving away free money. We have made incredible malinvestments, misallocations of resources like we've never done before. And now the Fed says, oh, we're going to take away all that free money. We're going to normalize interest rates. Everything that was built on that foundation is going to implode. We would have a financial crisis that would make 2008 look like a Sunday school picnic, and there would be no bailouts if the Fed is fighting inflation. So it wouldn't be another Great Recession. It would be a greater depression, which is why the Fed can't do anything. The Fed can't do what Paul Volcker did. That's why Powell, when he was asked why he admired Volcker, he said, I didn't admire him because he raised rates. I admired him because he did what he thought was right. Well, you know what Powell thinks is right? It's going to be going back to QE, going back to zero, as soon as this phony economy implodes. Because if you listen to everything Powell says about how committed the Fed is to fighting inflation, it's all contingent on the strong economy, on the strong labor market, on the false belief that they can raise rates and not push the economy into recession. Not only can't they do that, it won't just be a recession, it'll be a worse financial crisis than '08. And so as soon as we start hemorrhaging jobs, which is around the corner, and we're in recession, which we're probably already in because Q1 was negative GDP, we could easily have Q2, especially if we get the type of layoffs that I think are coming based on the implosion in the stock market, especially in the tech sector, in retail, in housing, in autos. I think we have massive layoffs coming. It's going to be like COVID, except without COVID. Instead of the government shutting down the economy is going to shut itself down. Not because it's been ordered to, but because it has no excuse, because the cheap money is gone. I mean, it's still cheap, but it's not cheap enough given the size of the addiction. And Powell's going to reverse course. And when it does, the bottom's going to drop out of the dollar. Gold's going through the roof. And you better be fully positioned in your portfolio when that happens, because it's probably going to happen while you're asleep, because the dollar is going to collapse in Asia, because that's where our biggest creditors are, and that's where the mass exodus is going to start. And don't try to be one of these market timers thinking you're going to be cute and you're going to stay in the dollar and then you're going to get out at the right time. You better get out now, because that's the only way to assure that you're out. And you better have your portfolio of dividend-paying foreign stocks. You better get into resources and agriculture, energy, industrial metals, precious metals. Own real things, own gold and silver. Do not own dollars or cryptocurrencies for that matter. I mean, those things will probably crash before the dollar.
You said in the pre-interview when we were talking, I said, wow, we've had some really terrible days. Last week it was 1,060 something points, and then another couple hundred, and then it's on the Dow, and another 600 on Monday. And you said, we're just getting started. Tell me about that. Why do you say we're just getting started?
Well, if the Fed does an about face, then the markets could stop falling, at least the broader market. I think the tech stocks, these high multiple stocks, the meme stocks, the cryptocurrencies, they're finished, regardless of what the Fed does. I mean, those things are going down. The air's coming out of that bubble. But real assets are going to go up when there's more inflation, because you can't be in cash in inflation. I mean, right now, in the short term, cash is looking pretty good. People are getting killed in stocks, are getting killed in bonds. But if the Fed goes back to inflation, it's the people in bonds that get killed the most, because inflation is destroying the value of your principal. It's destroying the value of your coupon. So that's the biggest risk. The bond investors are screwed no matter what. At least if the Fed goes back to inflation, if you own the right equities, you could be a winner. But if you're in cash or you're in bonds, you are definitely a loser. In fact, if the Fed continues to fight inflation, most people in bonds are still going to lose, because the lender is going to default. I mean, a lot of these corporate bonds are going to be defaulted on if the Fed continues to fight inflation with higher interest rates, and so you're going to lose your money to default. On the other hand, if the Federal Reserve decides to prevent default by going back to QE, then you're going to get your money back, but your money's not going to be worth very much. So it's going to feel like you didn't get your money back, because you're not going to get your purchasing power back, which is the most important part. It's not how much money you have, but how much you can buy with the money you have. And if you have millions of dollars, but all you can buy is a pack of chewing gum, what do you got?
And, I know you also have Euro Pacific Capital, which your banner is, but you also have Schiff Gold. And, gold's been kind of taking a hit. Is this buying opportunity? I have, one of my sponsors is like, it's been pretty quiet. I said, wow, it's going down. Now's the time to buy it. Am I wrong? I don't give investment advice, but I just think with all your buy real things, you don't have to be real cute. If you really just wanted to put some money somewhere, you would just buy some actual hard assets, gold and silver, which I know you have on the Schiff Gold side.
Yeah, well, the banner I have up here is my asset management company, Euro Pacific Asset Management. That's my Puerto Rican-based RIA, and we, manage portfolios from here directly and through the broker-dealer Euro Pacific Capital. But sure, yeah, Schiff Gold is if you need physical gold and silver, and I recommend it. Especially silver right now. I mean, silver's gone down a lot. Gold has been pretty stable. It's around 1,850. So yeah, it's not above 2,000. It wasn't able to maintain that milestone. It peaked its head above there a couple times, and for a while it was hanging above 1,900. But the main support for a while has been around 1,850, and that's kind of where we are, even 1,800. So gold has held up much better than other assets. If you compare gold to stocks or bonds or cryptocurrencies, gold's done very well. And in fact, in terms of other currencies, not the US dollar, gold is either at or near record highs. If you look at the yen, you look at the euro, look at the Aussie dollar, look at the Canadian dollar, it's just from the prism of the US dollar that gold's pulled back a bit. But again, in relation to other assets, gold has really held its value very well, and I expect that to continue. But again, what's preventing gold from taking off is this false belief that the Fed could do what it's pretending it's going to do, and that is successfully bring inflation back down to 2% by only raising interest rates to 2.5%, 3%. It's never going to happen. Interest rates would have to go much higher, and the economy can't afford it. And not just interest rates. The Fed has to drain all that liquidity. The Fed flooded the markets with cash, especially after COVID with QE. That's the inflation. It's the expansion of the money supply. We have all this extra money chasing the goods, and we don't even have as many goods because we shut down all these factories. So you have more money, you have less goods. That's a recipe for disaster. What the Fed needs to do is withdraw that liquidity. It needs to dump a lot of U.S. Treasury bonds into the market, a lot more than what it's planning on doing, and it hasn't even started yet. And it needs to suck up those dollars and destroy them. It needs to take out of circulation the money it put into circulation. But how is it going to do that? The economy needs that money now. You can't take it away. Everything is going to implode. Now, they need to take it away. They need to let everything implode, but they don't have the political guts to do that. And so they're only pretending they're going to fight inflation so long as they don't think it's going to cause any real pain for the economy or for the markets. But as soon as they're confronted with reality, they are going to change on a dime. Remember, these guys who are running the Fed now, guys and gals, you go back to 2004, 2005, 2006, not a one of them thought there was a housing bubble. And every person, including Janet Yellen, who then became Fed chairman and now is Secretary of the Treasury, Yellen even said, if I am wrong and there is a housing bubble, even if it pops, it's not going to hurt the economy. That's what she said. That's how clueless this woman was when she was on the Fed, and she's just as clueless, if not more so, now that she's part of the Biden administration. But the Fed always gets it wrong, right? That's why they said subprime was contained. Of course it wasn't contained. Yeah. How could they get that wrong? Then they said inflation was transitory. They were off by a mile there. The Fed never gets it right, yet the markets never stop pretending to believe them. But when the markets realize they're bluffing, or they figure it out because the Fed admits it, because the Fed does a reversal due to a weakening economy or a bear market, one or the other, but either a crash in the market or a crash in the economy, it's hard to say what comes first, but one of those two is going to trigger the Fed pivot, and then everybody will know. Right? The Fed would have shown its cards, and the markets will react.
We have midterm elections here. I don't know how they're going to be able to pull this off. I mean, they're coming up with every crazy radical idea, like the Ministry of Truth now is what they're calling it. That if you say the truth, that, oh my God, don't do that, you'll hurt the Biden Obama administration. And he is behind the scenes, I think, running things, and that's according to Jen Psaki and Nancy Pelosi. But anyway, I digress. We've got record high diesel prices. We have trucks parked with no parts. We have record high gasoline prices going into the summer driving season. We have record high fuel stuff. Let's talk about that. I mean,
think about this, Greg. We have record high prices with the dollar, around a 20-year high.
Oh, yeah.
Think about that. Think about how much higher those prices would be, and think about how much higher those prices will be when the dollar falls, because it's gonna fall. Because another thing that's at a record high is our trade deficit. I mean, it's off the charts at a record high. We've never seen anything like it. I mean, if you remember when Donald Trump ran for president, his main issue was the fact that we were losing on trade. And he was going to make America great again by turning around, our trade deficit. And the trade deficits are maybe almost double what they were before Trump became president. That's how bad they are. So if we were losing before Trump, we're losing bigly, after Trump. To a massive degree. Trade deficits over time really determine exchange rates, as do budget deficits. And even though Biden likes to claim credit for reducing the budget deficit from 20 to 21, when we had this crazy deficit because of COVID, if you look at the current budget deficit that Biden has, it's almost triple the 2019 deficit, which was the last pre-COVID deficit. So we've tripled the size of government, we haven't diminished it. Where are we paying for this money? Where are we getting all this money to triple government? Did we triple taxes? No, not even close. So we're just spending money that we created out of thin air. We're running these massive deficits. So when you have twin deficits on the order of magnitude that we have now, once this noise is over with the dollar, once this scare and this flight to quality, bid is gone, and the markets, figure out what's happening, the dollar is going to collapse. It's going to go down like a stone. It has so far to go, and that is going to fuel the inflation fire, as will the Fed's return to QE. Because what is the Fed going to do if we go into a massive recession with lots of unemployment and companies start defaulting on their debt and homeowners start defaulting on their mortgages? What are they going to do? Well, we already know what they're going to do. They have one playbook, right? Print money, bail people out, send people checks. Well, imagine if they start printing dollars when the dollar is already crashing. Imagine if they start pursuing a highly inflationary monetary policy, not when inflation is below 2%, but above 10%. Right? Imagine that, because that's the world that we're headed into.
That's their official rate. I mean, that's not really, you say inflation at 10%, it's at 8.5 now. That's only 1.5%, and that's a fantasy inflation. That would mean Williams would probably say it would be 20-something% at shadowstats.com. But I wanted to talk about this, the when. When are they going to do an about face? And I think that's going to be even worse than what we have now, because when somebody goes, oh, what? Peter Schiff was right. They couldn't fight inflation all along. Holy crap. Sell. Buy gold, buy oil, buy Chevron, buy, right?
Yeah, I mean, it's hard to believe it's going to be that easy. It's hard to believe you're going to be able to make the trade after the Fed tells you that. I think you're going to have to figure it out and just take a chance that it's going to happen, because it can't be that easy.
It's not a chance.
Listen, maybe you could wait for the Fed to tell you when to buy gold and then you buy it. But, I have a feeling it won't be that easy, and I don't want to take a chance that by the time the Fed gives me the green light to buy gold, it's already $5,000 or $10,000 an ounce. I'd rather buy it now.
Well, it's not a chance. I mean, what you're laying out is these are all sourced facts. I mean, it's just a matter of when, not if, right?
Oh, yeah, and it's been a matter of when for a long time. It should have already happened. In fact, because it's taken so long, a lot of people just are complacent and they think it'll never happen. Oh, you see that Peter Schiff, he's been warning about this for so long, he's wrong. No, I've been warning about it for so long because I'm right. It's just that we haven't seen the final absolute consequence. But if you look at how many things have happened over the last decade that I said would happen, so much of my forecast has already come true. And most of the stuff that's happened is what the experts said couldn't happen. So the experts have been wrong on just about everything except the final outcome. I've been right on just about everything except the final outcome. So what's more likely, that the final outcome moves in line with all the other stuff that I got right? Or the guys that got everything else wrong, somehow the outcome ends up jiving with what they thought, even though nothing they thought that would happen between here and there turned out to be true.
And let's talk about this is a political thing. You wrote on your blog about having, the politics is bad economic policy. We have this midterm election. Biden's in the phony polls, the best they can make him look, it's terrible. The Democrats, I think 31 have quit the House. They're taking their campaign bribes, donations, whatever, and leaving because they know they can't win. And so I find it hard to believe that the Fed, which is full of a bunch of Democrats, is going to allow the economy to tank going into the 2022 midterms. I mean, I think the window of time is closing that either they start inflating again or they can, it's going to be awful. I mean, right?
Yeah. I mean, right now they're dismissing the negative 1.4% print for Q1 as being transitory. And they are expecting a stronger Q2. Well, if we get more and more evidence that Q2 is going to be weak, that may put a lot of pressure on the Fed to do something, because if we end up in a recession, if we get a negative second quarter, we won't get the official report card until like July, right? And then we'll get the second quarter numbers. And then we're like a month or two away from the elections, or the November, or a few months from November. I mean, I don't think the Democrats want to run on a ticket of, yeah, we just got you into a recession.
Yeah.
Re-elect us. So they may have to do something, because the Fed, despite denying it, is extremely political, and it always favors the party in power, right? Especially the party that has the White House. Doesn't really matter, the party affiliation of the occupant, because, Powell was nominated initially by a Republican, Trump, but he was reappointed by a Democrat. And his job is to make that president look good, as far as he's concerned. And if he wants to get reappointed again, that's what he's got to do. Even if Biden doesn't get reelected, the next guy could always, look at how well you helped out his predecessor. It's about being a team player. And in fact, Bernanke admitted this himself. I've talked about this interview. He was doing like the Motley Fool interview, and one of the fools, I forget which one it was, asked him, because they played some clips of the idiotic things he was saying in 2006 and 7 about how subprime wasn't a problem, the economy was great, nothing to worry about. So the fools play him this clip, and they said, how do you feel now, listening to this, knowing how wrong you were, right? And instead of saying, yeah, I really got that one wrong, man, I feel like a complete idiot listening to that, instead of saying that, his answer was, well, I couldn't really speak my mind back then. I was a member of the Bush administration, and I really had to toe the party line. So here you had the independent chair of the Federal Reserve claiming that back then he really wasn't optimistic about the economy. He really saw a lot of problems, but because he fancied himself a member of the Bush administration, he had to lie and tell everybody things were good because that's what Bush was saying, and so he had to toe the party line. And nobody reported on that. I mean, I'm the only one that ever talked about that admission. But I think it's a startling admission that a lot more people should know about.
And you think that, and here's what I'm getting to, fast forward to, the November election, which is coming up in about, 6-7 months. And, wow, they're going to have to do something soon, aren't they? They're going to have to do an about-face soon, are they not? In order for
yeah, and, they've already pre-blamed the problems now on Putin. So I think that one of the reasons that we want the war with Ukraine to continue is so we can keep blaming everything on Putin. So I think they have to keep funding the Ukrainians, at least through the midterms, so they can have that excuse to blame not only inflation on, but maybe a recession.
Well, Pelosi wants to cancel $40 billion of COVID money and send it to Ukraine. I mean, you had Austin, Secretary of Defense Austin, say we want to drag this out. What kind of stupid? You want to drag? Just what you're saying. Secretary Austin said their goal was to drag it out and weaken Putin.
No. The best thing that can happen to the Ukraine is to end this thing as soon as possible.
I mean,
that peace is better than war. And anybody who thinks, we have to stop Putin here, otherwise he's the next Adolf Hitler. Look, there's one Adolf Hitler. There's not, we don't have another Adolf Hitler lurking. That's very rare. I mean, maybe you had a Stalin, but I don't see that. I don't see Putin having any agendas of reconstituting the Soviet Union. In fact, personally, I think had we done the right thing and disbanded NATO, which at best outlived its purpose, if it ever really had one, once the Warsaw Pact fell apart, once there was no longer a Soviet Union, we did not need NATO. And if we would have just gotten rid of NATO, none of this would be going on right now, and we wouldn't be at war. We would still be at peace.
Oh my God, Pierre Delecto, Mitt Romney would call you a traitor. He would call it, because he said that to Tulsi Gabbard, who said, wait, whoa, on this war. All she wanted to stop was say, hey, hold on a minute. You're talking about a nuclear-armed country. Tulsi Gabbard's a traitor. So Pierre Delecto, Mitt Romney, would call you a traitor for wanting peace and wanting not to kill people.
I mean, my whole thing is, look, all we want to do is have a good enough national defense so no one's going to mess with us. Right. That's all that matters. I mean, we don't want anyone attacking the United States. That's our foreign policy. George Washington was right. how many, 250 years ago, don't meddle in European affairs. We should, keep out of it. The irony of it is that a lot of people don't even realize this. Had we not gotten into World War I, there probably never would have been a World War II. So that shows you what can happen. We should have minded our own business in World War I. I think World War II is a different story. I think that was a war that unfortunately we needed to get involved in. But had we not gotten involved in World War I, and we certainly did not need to get involved in that conflict, it would have ended on a much better terms for Germany. There would never have been a Nazi party. There never would have been an Adolf Hitler. Not that I'm blaming America for World War II. It's just these are the unintended consequences of these things. And so it's always better to err on the side of peace and not to get involved.
And the last but not least, it's because we're talking about this on a financial sense, it's Russia, 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 sanctions, sanctions, sanctions. The Europeans are cutting off their own fuel. I mean, the euro is below the dollar, at least it was.
This is suicide. I mean, it's crazy for Europe to be pursuing this policy. I mean, first of all, why did they get so entangled with Russia in the first place? This was supposedly their big enemy, yet they're totally dependent on them for so many resources like natural gas. So the whole policy didn't even make sense. But the worst thing about these sanctions is how they're going to backfire on the United States. First of all the products that Russia is selling are going up in price. Russia is still selling it. In fact, Russia's trade surplus with the United States is at a 12-year high right now. Our trade deficit is rising with Russia, not falling. And Russia is, making some money because their resources that they own are now more valuable. But we are sending a powerful message to every nation, in particular China. You better get out of US dollars, because if you do something that America doesn't like, well, you've left yourself vulnerable. America can punish you with sanctions. And so if you don't want America to have that kind of leverage, then don't hold dollars. Don't own U.S. treasuries. And you're talking about our biggest creditor, telling them to get rid of their U.S. dollars and their U.S. treasuries. And America needs to borrow money because we're broke. We borrow from everybody. But now we're showing people how dangerous it is to loan us money, not only because we might inflate away the obligations, but we may sanction you. We may use this as leverage against you and the vulnerable position that you place yourself in. Russia had a lot of US dollar reserves, and it lost access to those reserves. Had Russia had more reserves in gold, it would have been in a stronger position. Fortunately for Russia, I guess, it had already converted a significant percentage of its dollar reserves into gold. It probably wished it had converted all of its dollar reserves into gold. But now China is looking at a mountain of dollar reserves and thinking, hey, I'd much rather have gold. And it's not just China. What about all the other countries? You never know. Not that you're thinking about starting a war, but who knows who's going to be the next, political punching bag for the United States. Some American politician is in trouble in the polls, and they want to blame the problems on some foreign nation, and then you end up on the wrong end of a sanction. So I think, we can laugh about the weakness in the ruble. By the way, the ruble actually strengthened against the dollar. It had an initial decline, but it recovered those losses. And I think that ultimately what we're doing, like most government programs, is going to backfire and do more harm than good, especially harm to the United States.
And one final thing, prediction. Where do you think we're going to be by the time Election Day 2022 rolls around in November? Is the Federal Reserve going to be on their fifth or sixth rate hike, or are they going to be, or are we going to have inflation or RABA, which I don't see how it's damned if you do, damned if you don't scenario, is it not?
Yeah, I don't know. It all depends on, when the Fed pivots. Because some of that is the stock market. Will the stock market continue to fall? If we go into a bear market in the Dow, the Dow's only down about 12 or 13%. NASDAQ's down almost 30%. Russell 2000 down about 30%. So if the Dow goes into a bear market, we'll probably look at NASDAQ and Russell 2000 down 50%.
Wow.
That's a big decline. That's a huge reverse wealth effect. But more important than the reverse wealth effect, I think a lot of these companies are going to be laying off workers because the only way they were able to employ workers was because they were selling stock to investors to cover their burn because they were losing money. Well, if investors no longer want to buy stock, then they have no way to pay their workers. And a lot of these workers were getting paid in stock options that are now underwater, and so they may not want to work for stock anymore. They want real money. So we could see a huge increase in unemployment based on a collapse in the stock market. So depending on when those numbers really rear their heads, will depend on the Fed. I mean, if the Fed keeps hiking rates based on its timetable, another 50 basis points in 5 weeks or so, and then another 50 basis points, the stock market is going to keep going down, the bond market is going to keep going down, and inflation is going to keep going up, because these rate hikes are not enough to do anything about inflation. In fact, if anything, they'll make inflation worse. I mean, nobody is talking about this, but if you're not dramatically shrinking money supply, and all you're doing is gradually ratcheting up rates, and so they're still negative, but they're less negative, but you're moving them up, you're just increasing the cost structure for debtors. A lot of businesses, a lot of employers, companies have debt. And as that debt becomes more expensive to service, those higher interest rates are just like higher wages or higher raw material costs. They all form the supply curve, and they get built into the prices that are charged to consumers. So consumers are going to end up paying higher prices because of higher interest rates. And of course, they're going to pay higher interest rates themselves. How many Americans have adjustable rate mortgages? A lot of people. You'd be surprised at how many adjustable rate mortgages there are out there. And they're all going to reset at much, much higher rates than what people were using. But also, people underestimate how much Americans relied on serial refinancings to continue to spend money. When interest rates were at zero, a lot of people were able to avail themselves of that lifeline. They could just refinance their mortgage and get a lower rate and maybe even extract some cash at closing and have some money to spend. Well, that window is shut. Nobody can refinance into a lower rate. You've got mortgage rates now 5.5%. What person has a mortgage rate above 5.5%? Nobody, right? There are none of those mortgages are left. And if you have a mortgage above 5.5%, it's because you're so high risk that nobody would lend you money anyway. So people can't go back to that well anymore. They're tapped out. And speaking about tapped out, the savings well is tapped out. That's been bled dry. And now look at credit card debt. The last couple of months, we've seen all-time record explosion in credit card debt. And think about this. Inflation is an expansion of money and credit. Credit is still expanding. The Fed is supposedly fighting inflation, yet Americans are borrowing more money and spending it on their credit cards than ever before. That's more inflation. To fight inflation, you've got to get Americans to put away that plastic. You've got to raise interest rates high enough so that Americans stop buying stuff they can't afford. If they're going to respond to higher prices by just borrowing more and spending it, you're just throwing gasoline on that inflation fire.
Whoa. Thanks for taking us to school on where we are right now. What you're laying out is just disastrous. A final question. What should just a common Joe do right now? Should he buy food? Should he buy water? Should he buy silver? What should the common Joe do right now? Should he buy toilet flappers because those are going to be all the trucks will be
buy all those. Like, I've been giving this advice for the last couple of years. I've been telling people, if you have a lot of money, send it to me, right? So if you're not the average Joe, if you've got a lot more money than the average Joe, and you don't want it, confiscated through the inflation tax, which is really what inflation is. It's the government paying for spending by printing money instead of collecting taxes. And if you don't want to be taxed by inflation, you need to avoid dollars and dollar-denominated assets. So if you have a lot of assets, give my guys a call at Euro Pacific Asset Management, and let us manage a portfolio to avoid that tax and preserve your standard of living. But if you don't have a lot of money, if you're barely making ends meet, the advice I've been giving people for years is to stock up on the stuff you're going to need, especially the stuff that doesn't perish, that has a long shelf life, whatever it is, right? Toiletries, your toothpaste, your deodorant, your razor blades, soap, toilet paper, and then there's a lot of items, around the house that have a very long shelf life, even things that you can eat, can stay canned. Buy them. Why? Because the price of stuff is going to go up, let's say at least 10% a year. So that means if I buy that extra tube of toothpaste now, instead of waiting a year and then buying it and paying 10% more, I got a 10% return on my investment, guaranteed. I mean, that beats the hell out of leaving the money in the savings account and getting next to nothing.
Yeah.
And there are a lot of prices that are going up 20, 30%. But the other problem is not only is the stuff that you're going to need in the future be more expensive, it may not even be available. It may be rationed. Because one of the things that I've been expecting for a while, and I still expect it, are price controls. Because the politicians want to blame greedy companies for gouging the customer, right? They always want to blame somebody else for inflation. Well, if it's the fault of businesses, if businesses are causing inflation by gouging and raising their prices, well, let's just make a law that says you can't raise your prices. And when they do that, then stuff is going to disappear. You're going to have shortages, and then if you want to buy something, you're going to have to buy it illegally on the black market, and you're going to have to pay a big premium because the guy that's selling it to you is risking jail, so he's going to want to get paid a lot of money to take that risk. So rather than having to buy your toiletries on the black market, just stock up. And worst case scenario, maybe your neighbor ran out of razor blades. If you've got an extra supply, well, you could barter some of your razor blades for something that he's got that you want, because he might not want the paper money because it might not have any value, which is why silver is a good thing for the average guy to own. If you don't have a lot, you can stock up on some silver coins, some 1 ounce silver rounds, some junk silver, because when you have to barter, silver can come in handy.
Peter Schiff, Schiff Gold and Euro Pacific Asset Management. Peter Schiff, thanks for joining us today on USAWatchdog.com with the bad news and then the good news for the warning. You're warning people of what's coming down. And I'm telling you, back in 2008, they had this video. Schiff was right. Of course, all the network financial shows won't have you on anymore because they don't want that video to be out. But hopefully they'll cut some of this right here out of this video. And you're going to be right again, my friend. I think you're going to be, you're already been right in multiple ways already.
Forewarned is forearmed. And yeah, all you have to do is, listen to the things that I've been saying, go back in time, read my stuff, listen to my, I do my podcasts every day, shiffradio.com, or not every day, but 2 or 3 times a week, Schiff Radio on YouTube. You go back and listen to the podcast from 5-10 years ago. I mean, all this stuff is not an accident. The stuff that's happening is happening for the reasons I said it would happen. Sure, it may be playing out later in time than I first imagined, but you can't get everything right. I can't time something like this with perfection. But in the scheme of things, in the broad scheme of things, when they write the history books on this era, my predictions are going to look extremely prescient, not only in what happened, but when it happened, because it's happening in a relevant time frame. And it's happening in a time frame where you can do something about it. You can protect yourself. You can profit. You just can't wait too long and press your luck.